What changes with these two heavyweights weighing in?
Well, the dynamic certainly changes. You know, as we spoke about yesterday, we have two billionaires going at it against each other. Charles Ergen for Dish on one side and Sun for Softbank on the other side. And the hedge funds have clearly chosen their side. They're saying that Charlie Ergen has the better plan for now. And up until this point, Softbank has really made it a point to make it seem like the Dish offer is just a distraction. They're going to go forward with their bid. You know, a banker described it to me as hang out and create doubt kind of strategy. Now they may be forced or compelled to bump their offer. That said, they do have a breakup fee and they can walk away with actually potentially making quite a bit of money just by walking away from this deal.
Okay, so that's another possible strategy, I guess. But why Paulson, why Omega? Why are they so keen on Dish?
Well, look. Charlie Ergen has a pretty compelling story. Basically, what he's saying is if you combine the spectrum that Dish has with the spectrum that Sprint has, you can very easily make that operable the first, you know, basically
from the get-go.
From the get-go, right. And a lot of that spectrum actually can be converted to LTE or already uses that standard that can compete with AT&T and Verizon, whereas with Sprint alone, and the Softbank would actually have to make an investment to change that spectrum over from what it's currently using to what it will be using. It requires a lot more money, perhaps a lot more time. So the hedge funds are kind of buying into that strategy. But let's be clear, they will go in favor of whoever presents the higher offer. So if Softbank comes back with a better offer, you better bet your money that they will accept that offer.
Okay, and obviously we have a little graphic up here, cash to shareholder, shareholder ownership. And I remember you broke down that because obviously we know 25 billion is higher than 20 billion, right, but it's also the component of cash in here that's important.
It's absolutely important. Now, what Dish is saying is that if their offer values the company at about 13% more, but what's at issue is this cash portion, but there's also a stock portion here, and that is what is at contention. Softbank is arguing that at the end of the day, shareholders will be rewarded with a standalone Sprint. And what Charlie is saying is that shareholders will be rewarded down the line because you get a combined company that will potentially, going forward, be more valuable than Sprint alone, and shareholders can, you know, gain and participate in that upside. But what remains to be seen is how much more money Dish has to raise to make its plans go through, and not to mention the fact that his vision, Charlie Ergen's vision, is a revolutionary vision that really doesn't have like a clear path. He wants to bundle TV and wireless. That's not available these days. So the question is, can he make that happen?